Hey guys, today let me share with you experience of mine. It is in context of raising finance for a company which is into noodle business. Noodle business means Maggi or YY, which we all have consumed at some point of our life, right? So this company is trying to get into that market. They are trying to come up with a manufacturing setup which is into noodle products manufacturing, right? So let me share you some of the learnings which I've got, some insights which I've got, and how we as a team have gone through this entire exercise, right? So the case study is about assisting a company raising finance for its noodle business. So few basic details. One is this industry in which this falls. It's very important for us to classify the industry in which this manufacturing setup is coming up. So this falls under the broader gamut of food processing, right? Just a second. Yeah. So then the project is being set up to manufacture instant noodles, which I already have spoken about. Then the estimated project cost for coming up with this setup is roughly around 25.34 crores, and the location was at Rourkela, and the proposed D ratio, the debt equity ratio, was 1.45, right? So now there were certain aspects with that surfaced out during the interaction with different stakeholders, and they were like this, that the group had other companies which is into manufacturing, and the other company was into export of bulk drugs, organic and inorganic chemicals, right? So that when see, management analysis is also a very critical part in the entire financial analysis understanding, right? So over there we have to meet the top management and senior officials over there and try to understand whether they are capable to lead the show, right? So over here the directors are well qualified and experienced. We also looked into the shareholding pattern of the company as to who is holding the majority of the shares and stuff like that, right? So the total production that is envisaged is roughly on 33 tons per day, of which 80% of the manufacturing that's going to happen is for the own brand of the company, and 20% is in context of contract manufacturing, which is they are going to do it for some other companies, right? So and the other factor is that the main raw materials for the production of instant fried noodles are maida and oil, right? So these are few of the few aspects which we got to understand initially. Then when we analyze further, there are obviously a lot of things that shape up. So the other thing was that the location of the site gives easy access, convenience for transportation, abundant availability of raw materials. These are the aspects which we need to understand, because see, whenever a financial institution or anyone who is actually extending the finance, they see what is their priority. Their priority is to understand whether they would get back the money which they are extending, right? So they would like to think through every bit of thing which may stop the production, the functioning of this business, and which may halt the smooth operations of the business, and consequently for which the person may not be able to repay back the money. That is what their main worry is, whoever is financing. So all these aspects has to be very clearly understood. So if you are an investment banker and if you are helping the company raise finance, or if you are a commercial banker who is extending the finance, or you are say equity guy who is extending the finance, everyone has to be able, would be interested to understand whether the company has all the things in place so that they can run the operation smoothly and they would be able to recover the money, right? So everything. So this raw material thing is also very important. If tomorrow they are into production and the raw material is not there, that also doesn't help, right? So every bit of thing that one can possibly think of has to be looked into. So the location location of the site gives easy access, convenience for transportation is there, the availability of raw material is there. The main raw material, there's maida, oil, and flavoring ingredients. All raw materials required for the units are easily available in the market. The total estimated manpower, which was initially planned, was roughly around 60 employees. Now, since Rourkela is an industrial town, hence skilled and semi-skilled manpower is locally available for the project, right? So now these are few pointers which we understood once we spoke about with the management. Then we understood that the promoter's contribution, so out of that 24.5 crores, roughly 10.34 crores is going to be placed across by the promoter, in which 2 crores is going to be in the form of equity, and 8.34 crores would be in the form of unsecured loans, right? So that would form the promoter's contribution. Now this means the finance out of this 25 crores, this we have already mentioned, 2 crores and 8.3 crores, it's going to be the promoter's contribution, less rest of the amount, that is 15 crores, is going to be through long-term loan, so long-term finance which has been taken up, right? Now few aspects which we need to understand is that this 15 crores has to be, the company is intending to take in the form of a term loan, where they are okay of paying interest rate of 13.5% per annum, right? And the commercial operations date is going to be 1st October 2014, or 12 months from date of first disbursement of term loan, whichever is later, right? So whenever a company is starting their operations, a commercial operations date is identified basis which the projected model is framed up, right? So over here the commercial operation date is decided to be 1st October 2014, or 12 months from the date of first disbursement of term loan, whichever is later, right? And the repayment would start from 1st October 2015, or 24 months from date of first disbursement of term loan, whichever is later, considering a post-construction moratorium of 1 year. So post-construction, bank is giving a moratorium of 1 year. So for that 1 year, they need not pay any amount, right? So the repayment would start in that context, right? So so as you understand, 24 months from date of first disbursement. So over here, it's 12 months from date of first disbursement is the operations date, and another 1 year for when the repayment is starting, right? So 2 years from the date when the construction process is starting. So door-to-door tenure, right? Like from the point they are taking the finance, and by the time they would be ensuring that they pay back all the money to the financial institutions, is going to be roughly around 8 years. And this repayment would be in 72 ballooning monthly installments. Ballooning means what? That initially you pay less, and as the months progress, you start paying more, right? So as the business grows, as your inflow comes up, you pay more and more amount of money. It's not equally distributed. It's not that you are paying the same interest and principal every month. It is like at the initial days or months or year, you would be paying less, and it would progress gradually, right? So the production schedule is going to be something of this sort, that this much of lakh packets is going to be produced, right? So initially lesser production, as because it would take some time for the company to establish themselves in the market. So there shouldn't be a lot of production coming up for which they would not be able to sell it in the market. That doesn't make sense, right? So they would as you see, they slowly have progress in terms of the production schedule, beyond 13th 18, they are like taking it in a standard manner, right? So they would be working at a 100% capacity utilization level, right? And that is going to be for own brand as well as the contract manufacturing section as well. So this is going to be the total production, and the sales revenue is going to be like the sales price per packet for their own brand is going to be roughly around 5.25, whereas for contract manufacturing it's going to be 3.94. That is more or less stable over the years. The cost stream includes, as I said, the maida, vegetable oil, salts. So these are some of the major cost in terms of the raw material cost. Now there are different other costs as well, of obviously the employee cost, the water cost, the power cost. I'm not getting into that. I'm just discussing on the raw material cost because that is specific to this specific project that is coming up, right? So these would be the raw material cost norms and raw material prices. Now let us get a fair bit of understanding as to how the food processing industry is working. So FDI in the food processing industry in those years, this is more or less the structure in which the inflows had been in context of FDI in the food processing industry over the years, right? And the market share of instant noodles has slowly progressed, right, over the years from 2009 to 2013, as we see. And the demand for instant noodles, this blue line indicates the world demand for instant noodles, and this is specific to India, right? So this gives a sense that there is an increasing trend of instant noodles over the years, both at an Indian level as well as at a world level. So this gives us the confidence that this product is really required in the like there's a demand for this product in the market, and that is something which we wanted to understand. Then what are the growth drivers? So the first is in context of the changing consumer lifestyle. So change in consumer preferences and eating habits, increasingly younger population, growth in middle class with more nuclear families, boost to convenience food section. So people are trying to move into more convenience food consumption, right? So increasing in disposable income. India's personal disposable income had grown steadily at a CAGR of 18% during this period, 2008 to 12. So that was backed by robust growth posted by the service sector. So these are few of the factors which is in context of changing consumer lifestyles. Then as per the NCR study, there's an improvement expected in household income, right? So please understand this study was done few years back, and this is in that context at that point of time, right? But the objective of sharing this is for you to get an understanding as to what are the broader aspects that are looked into when such analysis is undertaken, right? So then other aspects around changing consumer lifestyles is in terms of increase in household income is likely to augment the affordability of this set of products. Moreover, with busy working schedules among the majority of employed workforce, ready-to-eat meal in processed food segment offer great convenience. To cater to the lower income consumers, major food processing companies introduce lower price small size packets. So this helped increase the affordability, particularly among consumers in smaller cities. And it was estimated that the number of modern retail outlets in India has grown from 200 outlets in 2005 to 3,000 outlets in 2012. So this also has been a reason as to what is really influencing the growth in this segment, right? Then changing consumer lifestyles. So in rural areas, realizing the increasing income levels, companies have increased their investments in setting up large distribution networks, thereby assuring better accessibility to processed foods in rural areas, right? So these are few of the factors. Then growing customer base in terms of the emergence of instant noodles has added a new dimension to consumer meals, and noodles are being consumed not just by kids who are the core target audience as an evening snack or a tiffin meal. Consumers of all age groups are consuming this more, right? So while it continues to be a home snack, it also increasingly being consumed at workplaces, colleges, and so on. Geographically too, the appetite for instant noodles is growing, with players now eyeing the semi-urban and rural markets, and the category's penetration is low in India, thus presenting a lucrative opportunity for growth, right? So then more options and variants. So introduction of new flavors in addition to the classic masala and chicken flavors. A wide range of flavors including Indo-Chinese, Chinese, tomato, etc. have been launched. Then growing focus on health. So brands are proactively introducing healthy offerings as part of their product portfolio. Brands have introduced packs in different sizes, right from single noodle packs to value weight noodle packs, right? So these are some of the factors which is influencing the growth. Then category extension from pouch to cup noodles. So a vital development in the market was the extension from pouch noodles to cup noodles and that are ready to eat, right? So rise in a younger working population and the migrant population. So also population of double income households. So these are some of the influencing factor. Top ramen offers different flavors in cup noodles, mini cup noodles, and mug noodles. Maggie and YY has extended to cup noodles as well. So these are some of the factors which is really driving more growth, and this is really seen to be a major growth drivers, right? And now some aspects to note are in terms of that the modern formats which provide high product visibility and good product displays are acting as good marketing platform for brands to promote their product offerings, right? So there are more price discounts, bundle offers, and all this stuff. Just a second. However, about 80-90% of the instant noodle sales takes place through traditional formats, mom and pop stores, which is not surprising since noodles are a regular grocery item. So these are aspects which has to be taken into consideration, because when you are trying to analyze whether there is going to be a demand in the market, or how the products are going to be sold at a product level or at a market level, right? So we need to understand the business logic behind it, and that is why I always place across the thought that financial analysis is not about working in just a financial model, right? Obviously that is in part, but more and beyond to that, you really have to understand the business, and for that you have to speak to the management, senior officials, you have to go to the market, do research, market study, you have to do primary research, secondary research, right? So you have to use all your means and ways to gather information and try to understand what is the real scenario around that product and the market, right? So thus players need to invest significantly in distribution and establish a widespread retail reach and tap into larger consumer base. That's distribution is going to be very key. The key challenge for players is to maintain price points and margins give the fluctuations in input costs. So it has been seen that the raw material cost keeps on there is a bit of fluctuation that keeps on happening, so that has an effect on the input cost, and the companies are not able to increase the end prices of their products so fast, right? But the input cost is increasing, which is making them reduce the pack sizes because they need to keep the prices constant. So these are some of the realities which are there in the market. When a competition analysis is done, this sort of framework is structured out to understand better as to who are the who are there in the competition and what products they are offering. So as we get to see Nestle, Nissan, CG Foods, so YY is of CG Foods, ITC, HUL. So these are the set of products that they are coming up with, and we need to understand where they stand vis-a-vis the competition, right? Then in terms of production, so what is the level of production that they would be coming up in context of lakh packets and all, right? So this I think I have shown it earlier also. The plant will be operation for 6 months during 14-15. So that is something which we need to consider when we are really building the financial model. The capacity utilization level for first years is estimated low, as the company will require time to establish itself in the market, which I have spoken about earlier. I think this is done. In context of some SWOT analysis, the group has experienced management who has started and successfully grown different business lines. The weakness is that it's not an established brand. The company will have to heavily invest in marketing to aggressively sell it. There's a growing demand of finished product in domestic market, and capacity, that's the opportunity, but capacity expansion by similar size players in the market will further enhance the competition. So we need to be aware as to what are the strengths, weaknesses, opportunity, threats. This all has to be taken into consideration, because there would be discussion and deliberation along in context of all these aspects with the financial institutions, right? So we need to have solid study at our end as an investment banker and as a financial analyst to really place across our thoughts, words, and justify the reason as to why this company should be really placed across the money which they are looking for, right? So in context of financial analysis, as you see, detailed analysis is done in terms of revenue, EBITDA, PBT, PAT, EBITDA by total income. So I'm not getting deep into this, I'll share across the PPT with you. Let me tell you that figures are not sacrosanct. I had to change certain figures from a confidential standpoint. Objective is not to really dig deep into getting into analysis on the figures, but trying to understand as to what is the process behind taking up such a activity when it's been placed across, right? Then you undertake a scenario analysis where we get to see what is going to be the IRR, minimum DSCR, or average DSCR in context of base case, or reduction in, when we say consider 5%, 3% reduction in sales realization, or 5% reduction in capacity utilization, or increase in raw material cost by 3%, or increase in interest rate by 2%. So we have to take into consideration how the figures are going to shape up in each of the contexts, right? So so that we understand this is the range this is the range within which the financials would shape up. The company would be able to pay back the money if there may be some contingent event for which there is a reduction or increase in certain variable aspects, right? So this is how the entire flow of operations happen in terms of really taking a decision as to whether a financial institution should actually be extending finance to that company, right? So objective, as I said, is to give you a flow as to how this entire exercise is undertaken. I understand I cannot really share everything because it really takes a lot of time to do such detailed study, but this is just to give you a flavor. I think if I keep on giving such case studies on a continuous basis, this will help you shape up your thought as a financial analyst as to how you should go about, and then that interest is going to trickle down to help you to think in a certain direction, which is going to help you do justice to the financial analysis engagement that you can be a part of, right? So I hope it adds a lot of value. If you have any questions, please place a question on the comment section. If it adds value, give a like. You can share it and place it to your friends and whoever you think may be benefited through this. And if you want the PPT, please write as PPT in the comment section. I'll share the PPT with you, right? See you in some other case study. Thanks a lot.